everyone, and welcome back. You're watching The Money Show on ET Now. Well, if you're paying down home loan EMIs, you have reason to rejoice. And yet another one. I'm sure you're well aware that banks have been cutting interest rates, but guess what? There's been yet another round of interest rate cuts. However, should everyone refinance their EMIs, or should you consider switching your lender? What are the costs involved? What are the savings as well involved? Let's discuss all of this and more with Vipul Patel, the CEO and co-founder of mortgageworld.com. Vipul, really appreciate you giving us your time today on the show. To start with, do you think these low interest rates for home loans are here to stay? And also, what is the average saving in EMI a person can enjoy? Because almost everyone has cut their interest rates, but now you have banks offering interest rates as low as 6.7%, going to 6.9 or 7%. So yes, there is a 20-30 bips difference. Even if it's a 20-30 bips difference, what's the kind of saving potential one can enjoy?
So I'm happy to be here on the show, and interest rates, lower interest rates are here to stay. And I personally presume and I believe that we will see this kind of rates going on for, if not more, at least another 18 to 24 months. We will be at a low before we start going up, and probably we may stay at this level. Talking about interest rates, if you borrowed a bag, okay, and you look at the rates currently, there is a gap of almost 100 basis points between what is being offered and what used to be offered earlier. So last year, if you were at, say, a rate of interest of 7.75 or 7.5, which was considered the best rates pre-COVID, post-COVID, we have institutions offering as low as 6.49, going to 6.7. So average pricing today for anyone would be under 7%. A 50 basis point gap on a 25-year home loan would give you a reduction. If you were to just look at the tenor of loan, say you are borrowing for 25 years, it could save you almost 30 EMIs, and that's a lot of money. Considering average loan size to be 70 lakhs in most major metros, you will observe that a small difference of 0.5% or a 50 basis point is resulting into a direct interest saving. If I would just compare interest, is 16.65 lakhs. And if you were to look at the number of months saved, then your loan could get over earlier. 300-month loan can get over in 268 months just with that 0.5% gap. So there's substantial gap, and I think it's fair. People should focus on getting lower rate from their existing lenders.
Okay. To what extent, sir, should home loan owners, or rather home loan borrowers, also consider the costs involved? I know some banks have scrapped off even processing fees, etc., but still there are processing fees, other fees involved in refinancing, prepayment fees as well. So keeping all of that in mind, or rather, do you think that these fees are extremely small and that the savings involved in refinancing are going to more than overshadow those costs?
Absolutely. The savings are exponentially high. So if you look at what banks call, some banks say we are waived of processing fee, but they would charge you a technical fee, a legal fee, a documentation fee. Under whatever head, no bank charges a home loan customer more than 15 to 18,000 rupees as a lump sum amount, irrespective of the loan size. Having said that, when I say you save 30 EMIs, and if your EMI is even 25,000 rupees for a smaller ticket loan of, say, 35-40 lakhs, or for 70 lakh rupees, if your EMI is, say, 50,000 rupees, half an EMI or just some 20,000 rupees spend is just too negligible. There is no big spend. In fact, there was a very popular question which I am always asked, that at what kind of price difference should one move from one bank to another or switch mortgage lenders? We at Mortgage World recommend that first negotiate with your existing lenders. Try and explain to them that a small 25 basis point, forget 50 basis point, a 25 basis point gap is like saving 20 EMIs or 18 EMIs, depending on what size loan and what tenor loan you have taken. So it makes a very big difference. So, and the the cost involved is minuscule. So I think most lenders are accommodating and by reducing the rates. And if someone doesn't, the client has all rights, and in all probability, client should move. But first, opportunity should be given to their existing lender to try and realign the rate to the market.
Vipul, are there banks also offering fixed rate loans? Because it's very tempting to lock in rates, at these levels.
Yeah, that's a very good question. And of late, this query has started coming up on the fixed rate side of business. Very few institutions, very few. I can count less than 5 institutions that I know offer fixed rate. But commercially, it's not a very good decision to take fixed rate for a long-term loan. So if you're a short-term borrower, you want loans for only 3 to 5 years or 7 years, then paying a fixed rate is good, because fixed rate is generally priced anything between 25 basis points to roughly about 100 basis points or 150 basis points higher. It's just that most banks don't offer fixed rate. There was an RBI circular in September 19, which said to all banks that link your rate to external benchmark. And when they say link, the circular explicitly used the word variable rate, or the rate which is varying on various factors and not fixed. Yet most banks have assumed that this applies to fixed rate, and they've completely abolished fixed rate. Lenders and nationalized banks, especially, who are historically known for offering fixed rate in some format, have completely disbanded. So now no nationalized bank, to my knowledge, is offering fixed rate. We have HDFC Limited, which has on its website, they are offering. I hear ICICI Bank offers on specific request, and there is Karur Vysya which offers. But other than these 2-3 institutions, there are not many players who are offering fixed rate. And in my personal opinion, fixed rate is a bad idea, because if the gap is more than 50 to 75 basis point, it just does not serve the purpose for a long-term borrower. For a short-term borrower who's at the fag end of their career, someone who's 50 plus.
Completely out of time. Correct. Vipul, we are actually really short on time, so I'll have to just cut you there. But, point taken. You may not really advise taking a fixed rate loan for long term. Thank you so much, Vipul, for joining in today on The Money Show with your pearls of wisdom. Folks, you can always catch this interview on our ET Now's YouTube channel. For now, we'll have to wrap it up.